baby. Call me Jerome Powell, baby. I got the money printer over here, and I like making this joke, but I don't know if we're in a bubble. Is this going to correct? Why is the market going up every damn day? Like, are we in a brand new bull run? Is this sustainable? I don't really know, but it's definitely benefiting the portfolio and it makes everyone feel a bit better about their lives. So let's just take a look and review the portfolio. The TSX, even on the Canadian side of the border, is starting to go up. Not from the stocks you probably want to be going up, but we're going to review all of this. And if it's a conversation you appreciate, damn it, hit that like button. Now, I have not been contributing to the portfolio this week because, like you, I am dealt with inflation and very expensive costs of living because we just moved to Toronto. I just had to pay my insurance, which I pay up front for the whole year because then I save money on the stupid monthly charges for monthly payments. So, but it was expensive. It was like almost a couple grand. My premiums have doubled living in a city now. I mean, I had to pay corporate HST. That was a lot of money. I mean, I had to pay a red light ticket because I'm running my red lights apparently, running those yellows. You got to watch out for those red light tickets. So I haven't even been looking at my portfolio because I haven't been able to put money into it. I have some cash. There's like emergency cash, that 14 grand that's just sitting there idle. Not doing a whole lot with that, but the portfolio is sitting at around 207,000 on my half, and it's crazy that it's just every time I look at it, it's just up another grand or two week after week, which is great. But I prefer to again for it to dip or at least level off. Come on, give me some more buying opportunity because as we know within my TFSA, I've been buying Tesla here, and Tesla needs to go down. I mean, Tesla is not going to be posting any real revenue growth this year. I think next year is going to be a big year for them in 2025, but this year I was expecting cataclysmic drops. And we haven't really got as much as I wanted because I bought at 181, as we can see here, but I wanted to go below that. Like I want to be buying the 150s and the 120s. I don't know if we're going to get there. That's why I started a nice little starter position, but we can see my Google position, and I'm hoping this continues because I think Google's cheap. That Google becomes an outperformer because I bought it at the same time I bought the S&P 500 in this tax-free savings account, and now Google's outpacing the S&Ps. So we're trying to keep that outperformance, right? So I really want to contribute some cash here. So we'll see what next week brings and what the opportunities are to start continuing to build out my TFSA that's worth around $25,000 today. My RSP is boring, idle. I don't know if I want to contribute to it this year. I think personal income tax is around March. That's when I'll find out what I can contribute to this account. We'll see how I feel about it. I might pull some money out of the corporation to do it. I don't know. We'll figure out when we get to that point. Otherwise, the corporation's crushing it. I mean, we've been buying some real boring stuff in here. I'm up 20% on my VOO position, and I also bought some Google in here. It's up 5%. Again, I know it's such short-lived things that like when you buy stocks, they go up, everyone feels good, but I like cost averaging when they're down, especially into the indexes when they're down a lot, because it's such an easy thing and a comfortable thing to do. And I like being right when things go down, because when they start going up, they could go up in perpetuity. We see Nvidia, right? And I'm going to do a video on Nvidia because I think it's a bubble still. We'll talk about that bubblish territory, but it's just it's uncomfortable because again, when we look at the S&P, right? You look at the year to date, and we are now up 6%, and we're only into the beginning of February. If we're going up 4 or 5% every month, I mean, that's not sustainable. I mean, come on, right? So how long is this really going to run for? I don't know. Time will tell, but it's nice to see that we're sitting at this all-time high over 5,000. It kind of reminds me of Tom Lee. He called this pretty accurately, and if we take a look at the 1 week, we can see the tech stocks are continuing to be the big movers. What I want to do is look at the 1 month and just see what's driving it, because it's really not the bottom half of the market, right? I mean, tech is still being one of the profound drivers of everything here. I mean, Apple, Microsoft, Nvidia, the chip sector. I mean, Amazon's up 13 damn percent. Outside of Tesla, like, tech is the story. I think Berkshire was just starting to outpace the S&P 500. It's doing very well here, so it's really neat to see. Whereas on the Canadian side of the border, we're starting to get some Canadian earnings, and they're not that great, but I think it's going to be a benefit to you, especially if you are a cash flow oriented investor. You know the way people chase like Altria Group, which I think is a terrible company, to try and get like an 8% yield? The Canadian stocks, I think, are more resilient than Altria Group is when you're talking about companies like Bell, the banks. I mean, really just boring things like Enbridge, which I'll do a video for Enbridge tomorrow because they just posted earnings today. And those companies are crapping out 6 to 8% yields. They're sustainable yields. They're much more, I think, reliable companies long run than the likes of Altria Group is, and they just keep dropping. And it's only because of the interest rates and kind of the inflation they're having. But if you need cash flow today, I would really be, paying attention to the Canadian markets, because we are not at an all-time high. We're not chasing like the S&P 500 is here, because we're not obviously as tech oriented. But we are green this year. We're now 0.66%, damn near laughable. And if we take a look at the stocks that are driving that, I mean, for the first week, the last week, mostly railways and tech companies, right? Like Shopify is up quite a little bit here by 9%. Shopify's been crushing it. There's just not a lot going on this week. It's pretty boring, right? But then you zoom out to the 30-day and we take a look at what's really driving the TSX this year. And it's really just a select few companies because it really isn't energy or the banks. But you look at the insurance companies, Manulife's doing well. The software companies are doing very well. Some of these odd little business companies like Waste Management doing pretty good. The railway starting to come back, construction, but just nothing like you would think, because if you're buying Enbridge or these major Canadian companies, they're not really doing anything for you. But I would detest that because I'm seeing people sell these things in favor of growth, and I'm obviously saying if you buy some of these dividend stocks, I think you're still going to get outsized returns sometime in the near term when they start cutting interest rates. I just can't foresee how that's not going to be a possibility when Bell's laying off a huge amount of divisions. They're refining their business to make up for some of the interest and other issues in their business, but they're still growing. I mean, their revenues were fine. I mean, they're not like massive growth beasts like Microsoft, but you don't need them to be. I mean, you just need them to be the sustainable businesses that they are with some slight growth ahead of them in the meantime until they get into an interest rate cut cycle, because you're getting such a good deal on those businesses as it is today. And like I said, you look at Enbridge, you look at Bell, these really boring companies. I mean, look at this, almost 8% yield on Bell, and it's down another percent today after earnings. Like, this company's down 4 or 5% already just in the last week. From the time of the high of 2022, it's down 31%. I mean, come on, like, unbelievable. So I'll just pass that question off. This was just a quick anecdotal video today, but there's a lot going on I'm going to be doing videos on, and if that's a conversation you appreciate, subscribe and always let me know what you think. But stay cool, stay awesome, and I'll catch you in the next one.